Investors awaiting new CPI data at 8:30 a.m. Eastern Time. Forecasters are expecting a month-over-month gain of 0.3%. And joining us right now on the economy and the markets is Peter Orszag. He's the CEO of Lazard. He was the director of the Office of Management and Budget under President Obama. And Peter, thank you for being with us today. Let's just talk broadly about the economy after we saw the much cooler than anticipated inflation numbers yesterday with PPI. Where do you think the economy stands at this point?
Well, first, I think the economy is in decent, not amazing, but decent shape. Obviously, the labor market has weakened a bit. Consumer sentiment is down a bit, but it's been holding up. I think on inflation, regardless of what today's number shows, we're likely to see some upward pressure on inflation. Every discussion I've had with CEOs over the past couple months is about gradually adjusting to the tariffs. So we've probably seen about a quarter of the impact of the tariffs in terms of pass-through to consumer prices to date. Historically, that's more like 90 to 95% pass-through. So I think you should anticipate some upward pressure on core inflation going into the end of the year and into the spring of next year.
The immediate market reaction yesterday to those weaker than expected PPI numbers was that the Fed really will have room to cut because we have seen the jobs market weaken. And the inflation that had been anticipated for a long time really hasn't shown up yet, Peter. So how much pressure does that put on the Fed? And even though we think inflation may be coming, is it more important for them to focus on the job side of their mandate?
Well, to the extent that there is upward pressure on inflation, if that gets realized and the labor market's weakening, they're just in a tough spot. That's the worst of all worlds. And so they're dual mandates in conflict with one another. It is their job to look forward a bit and see where the puck is going and not just where it is. And so I think this question of whether there is more built up inflation coming because companies basically have not passed through yet most of the impact of the tariffs is a big question for them to be debating and adjudicating.
Peter, you talk to a lot of other CEOs all the time. Why do you think the jobs market is weakening, particularly when we've seen stocks at new highs and corporate earnings that have done incredibly well?
Well, I think we have to separate two things. I mean, the overall jobs numbers are lower, probably in no small part because of the impact of immigration. But beyond that, there's an interesting question about what's happening to attrition and kind of voluntary job moves. It does seem like the labor market is weakening a little bit. That's also showing up a bit in consumer sentiment. I don't want to exaggerate this. The economy has held up remarkably well and is still doing well. So let's not kind of over-index on that. But there are some signs of a bit of weakening.
And what do you hear from the CEOs themselves? Like, what are they thinking that there could be higher inflation? There could be a slight downturn in consumer economy, but they're feeling pretty good about their own prospects? Or how would it shake out?
Yeah, look, I was in the Middle East last week. I'm in London now. I've been interacting with lots of U.S. CEOs. I think there are massive pockets of opportunity, but we are still living in a world in which there's huge uncertainty also. So you've got this duality of technology in particular being really exciting, but then on the other hand, the geopolitical questions and the course of the U.S. economy and the standing of the U.S. economy in the global world or the global economy also weighing on people. It just varies sector by sector. In general, though, I'd say CEO sentiment remains very, very positive right now.
What's the state of the deal market right now? We spent a lot of time yesterday talking about the IPO market kind of being open for business. And again, that may be in large part a reflection of where these averages are at this point and investor enthusiasm that goes along with it. But on the M&A front, what do you hear?
More momentum. I mean, what's happening is large companies are definitely considering large transactions, and private equity, where there's demand from the LPs, from their investors to get some cash back. I think you're going to see more M&A activity there also. And this is one of the things, I'm coming up on 2 years as CEO of Lazard. Yesterday, we just issued an update on our Lazard 2030 vision. We've had 100% total shareholder return over the past 2 years. Partly that's because of the steps that we're taking, and partly it's because the market is warming up also.
Okay, so what steps are you taking internally And how does that play into your vision for what's to come in the next several years?
Well, great progress to date, a lot of hiring. In fact, ongoing activity. It's one of the things I was doing here. We're nonstop in the recruiting mode to bring on high quality talent. We hit our productivity target for this year, a year ahead of schedule last year, and that was through a variety of things, including through the addition of additional talent to Lazard. And then on the asset management side of the business, I had said that this was supposed to be an inflection point for this year for that business. That is what's playing out. We have actually had net positive flows for year to date in our asset management business. And we just very excited to just name a new CEO of that business, Chris Hogben, who's joining us from AllianceBernstein, and who will start in December. And then really quickly, looking forward, I think what's particularly exciting is the ability of AI to further accelerate our growth and to further improve the excellence of the advice that we give to clients. We're really excited that Dmitry Shevelenko from Perplexity has joined our board, and this is going to be a massive focus of Lazard going forward.